to Anagram commodity video. I am Renisha from Commodities Research, present my monthly views on commodities. We have released a commodity monthly globe report today focusing on the monthly developments. Needless to say, unrest in the Middle East and the North African region, widely known as MENA region, continued to dominate the headlines last month. As we could witness, the crude oil prices rise was mainly forced by this MENA region, started from Tunisia and then spread it across the Middle East, including Egypt, Yemen, Libya, Morocco, and the list goes on. So I have made an attempt to explain the unrest situation topic through the topic called Knowledge Center in the monthly report. So go through the report thoroughly for more details. Rest in the commodity sector, the energy complex was the best performer, mainly driven by the rallies in the crude oil benchmarks. Since the crisis in the Middle East and the North African region, MENA region, acute, crude oil prices rose almost 23%, heading straight from $85 to $103, with a monthly increase of 8%. The only reason behind this big spike in the prices was the fears of the supply disruption and production shut, resulting in the shortage in the oil market. The higher crude oil prices caused world economy in terms of higher inflation with higher fuel prices, which also affects millions and trillions of people badly. The precious metals successfully capped their monthly gains since April 2010, as they continue to hover near the highest level since November 2009 as the violence in Libya persisted, spurring investors' demand for alternative investment and wealth preservation. This resulted in a gold rising nearly 6% in February and silver strong industrial and investment demand leading to 19% rise to a nominal 30-year high to prices of around $34. Nonetheless, safe haven demand managed to increase specifically since oil prices are expected to rise. Therefore, hedging against inflation remains the main theme for trading in gold, and as higher oil prices usually are reflected in higher inflation levels. Base metals started the month on a strong note with copper hitting a new record high of $10,190, and the strong demand coming in from the Chinese New Year, new lunar year. But in the later half of the month, China's persistent watchdog on inflation, that is People's Bank of China, and escalating unrest in Libya gave the bear players to take the command on the market and resulted bulls to lose ground temporarily. And the view for the next month, that is March, is that the prevailing economic uncertainty in the world market and the current situation in the oil market is complicating short-term trend for the crude oil prices. So next month prices could rise until the dust settles down. I expect crude oil prices to remain up in the level of $110 until the situation of MENA gets completely under control, and later may correct to around $85 to $90, discounting all the speculative movement with the pressure of high inventories with the end of winter season. While gold is expected to break all-time high of $1434 and touch $1450 and further in the upcoming month, whereas at domestic front the prices will range to rupees 21,500. Silver, which is my favorite performer, is also expected to outperform, with near-term target being $38 at COMEX and rupees 56,000 on MCX. I think the recent sell-off in base metals was not fundamental specific or metal specific, but downward rally is much sentiment driven and could be a technical correction. Looking to copper, fundamental remains positive, but the price will continue to suffer until the political tensions come to an end. And once it ends, once again the copper and other metals will are expected to resume its uptrend. So this is all from my side. For more details, please read to our Commodity Monthly Globe Report, March 2011 by Happy Trading.